Hey guys, my name is Divyang Patel and welcome to my channel Patel in Canada. In today's video, I'm going to break down everything about Canada taxes. Please make sure that you watch this video until the end because I will be sharing one example with numbers which can help you to understand the tax calculations as well as you will be able to calculate your own personal income tax. I hope this video will provide you great valuable information, so don't forget to like my videos and subscribe to my channel. So let's start now. In Canada, CRA is administering tax laws for the Government of Canada and for most provinces and territories. All Canadian residents are responsible to pay federal and provincial income tax. Canadian income tax is mainly separated in four categories based on the nature of income source. Number 1, personal. Number 2, business. Number 3, corporation. And number 4, trust income tax. We will focus on personal income tax in this video. All residents of Canada are required to file a Canadian income tax return annually. Before filing your tax return, you must identify whether you are a resident, a deemed resident, or a non-resident of Canada for tax purposes. According to the Canada Revenue Agency (CRA), you are considered a Canadian resident when you have established significant ties in Canada, such as having your permanent residence in Canada or a spouse or dependents in Canada. Having significant ties can also include holding Canadian documentations. For example, a social insurance number, that is SIN number, or a provincial health card and or driver's license showing your Canadian address. The CRA may deem you a resident if you spend 183 or more days in Canada in a year. If you maintain significant ties to another country or your country of origin, then you may be considered non-resident. In Canada, each member of the household who has income is responsible for filing his or her own income taxes. For example, you and your spouse have to file a return separately. If you have teenage children who earn income on a part-time job, the child will also file a return separately. There are four general types of income sources that are taxed. Number 1, employment earnings, which usually only apply to individuals. Number 2, profit made from a business activity. Number 3, investment income from property or investments. Number 3, capital gains on the sale of investment property or business. There are different rules that apply to each type of income, which therefore affect the amount of tax you will have to pay. To file a tax return and claim deductions, you will need to know what type of income you earn. For the simplicity, I will focus on personal or individual taxes in this video. As per CRA, you do not have to pay taxes on certain income taxes, such as GST, HST credits, Canada Child Tax Benefits, child assistance payments, lottery winnings, gifts and inheritances, income received from a life insurance policy after someone's death, income from a tax-free savings account, that is TFSA, and so on. Now, there is also a tax-free basic personal amounts set by the government. For the 2022 tax year, the federal basic personal amount is $14,398. This means that an individual Canadian taxpayer can earn up to $14,398 in 2022 before paying any federal income tax. There are also provincial basic personal tax credit amounts set by the province, which can be found on CRA website. I will put the link in the description for more details. Now, Canada has a very unique structure of tax rates and tax brackets. Now, let's see how you can file your personal income tax return. Many people prepare their own tax returns by either following the steps in the tax return package provided by the Canada Revenue Agency or by purchasing a software program. Some people prefer to get assistance from accountants or from tax filing services. A tax return must be filed by an individual who owed tax for the year. So, you can choose the method in which you feel comfortable. Make sure that you file your income tax return before the deadline because under the law you are required to file your income tax return and pay all taxes owing by April 30 of the following year. If you do not file a return and are required to pay taxes, you will be assessed a penalty of 5% of the amount owing plus 1% for each month it is past due up to 12 months. You will also be charged compound daily interest on any outstanding taxes. If you cannot afford to pay the entire amount you owe at once, you may be able to arrange a payment plan with Canada Revenue Agency. Now, let's talk about tax deductions and tax credits. The deduction reduces the amount of your income subjected to tax, while a credit reduces the amount of tax owed. Deductions are amounts you can subtract directly from your income before calculating the tax. For example, suppose you have an income of $50,000 and qualify for a $2,000 deduction. This type of deduction would reduce your taxable income to $48,000. If you are in the 25% tax bracket, this deduction will save you $500 in taxes. Some common deductions for individuals include support payments made to an ex-spouse, contributions amount to an RRSP up to your annual maximum limit, moving expenses if you had to move more than 40 kilometers because of work, and so on. RRSPs are tax deferral plans that allows you to put a percentage of your income into an investment account. You will not have to pay tax on the income you contribute to your RRSP until you withdraw the money. I will be uploading videos on explaining all the details about RRSP in the next few weeks. So keep an eye on my channel for new video uploads. Tax credits are amounts that reduce the tax you pay on your taxable income. The more tax credit that apply to you, the more you can reduce your income tax. The federal, provincial, and territorial governments each provide tax credits, which you can use to lower your taxes. Some tax credits are non-refundable, meaning they reduce or cancel your taxes payable. On the other hand, A refundable tax credit is a credit that can be paid to you even if you have no income tax payable. Some common eligible tax credits are Canada Child Benefit (CCB), GST HST credit, provincial and territorial benefits, disability tax credit, climate action incentive payments, Canada Workers Benefit, Child Disability Benefit, Canada Caregiver Credit, and so on. You can consult your accountant for more details about tax credits applicable to you. So, I have explained all the basic tax related information. Now, let's go through one example with numbers so that you can understand the actual tax calculation. So guys, here is the example of personal income tax calculation. Let's say Sam, 28 years old, is a Canadian resident and has worked for the past year for XYZ company in Toronto, Ontario. His wife Tina also recently secured a job with a good technology company in Toronto. Sam and Tina are wisely monitoring their money savings so that they can buy a home and start a family. Sam has a workplace pension plan and also contributes whatever he can into his RRSP. Sam also has interest bearing investment. Now let's see how he will file his income tax return for the year 2022. So, the step number 1 would be finding out total earned income in 2022. So we know that Sam's employment income is $75,000 from his employer XYZ company, and he has earned interest income of $5,000. So total income would be $80,000. Next step would be the deduction. We know that he is contributing in RRSP, so the contribution was $10,000, and he is also participating in registered pension plan through his employer, and the contribution for that one was $10,000. So the total deduction was $20,000. Now let's move on to step number 3, total taxable income. So if we deduct deductions from the total income, our taxable income would be $60,000. Now let's move on to step number 4, calculating Sam's federal non-refundable tax credits. We know that basic personal amount for 2022 is $14,398. CPP contributions $2,300, EI contributions $800, Canada employment amount is $1,195. So total amount would be $18,693. So total federal tax credit would be $2,804. Let's find out in step number 5 the Sam's federal tax on taxable income. Sam's 2022 taxable income is $60,000. He will apply a tax rate of 15% on the first $46,605 of his income and a tax rate of 20.5% on his remaining income of $13,395. So federal tax for the first tax bracket would be $6,990, and federal tax for the second tax bracket would be $2,745. So if we add both of these together, the total federal tax payable would be $9,737. Let's move on to step number 6, that is finding out net federal tax. So federal tax on taxable income is $9,737. Federal non-refundable tax credit is $2,804. So net federal tax would be $6,933. This is the total Sam's federal income tax due for 2022, and that is $6,933. This amount needs to be reported in the T1 journal return form. Now, the step number 7, that is calculation of provincial or territorial taxes. As Sam is residing in Toronto, he will calculate the amount of taxes owing to Ontario. So let's go back to the Sam's taxable income of $60,000. He will apply a tax rate of 5.05% on the first $42,960 of his income. So that would become $2,169. Now, a rate of 9.15% will be applicable on his remaining income of $17,040. So that would become $1,559. So Sam's total provincial tax owing will be $3,728. Now, the final step, step number 8, is the calculation of refund or balance owing. We know that federal tax payable was $6,933. Provincial tax payable was $3,728. So the total tax payable is $10,661. But the tax already paid by his employer through payroll deductions was $13,500. So the net tax owing would be minus $2,839. As this amount is negative, that means Sam will receive a refund of $2,839 from the government. So in this example, Sam's income taxes are fairly straightforward. But as you have seen, preparing your income tax return is multi-step process. Additionally, if you have other sources of income from business, real estate, stocks, etc., then your return may become complicated. So, I would recommend consulting a tax professional while filing your taxes. I will make another video about how can you file your income tax return online for free in the near future. So don't forget to press the bell icon below to get notifications for my future videos. Let me know your thoughts about this video in the comment section below, and I would love to review the same. Moreover, please press the thumbs up button to like this video, and don't forget to subscribe to my channel. Thank you for watching, and I will see you guys in my next video.